Okay, let's get into the monetary policy. A couple of weeks ago, the Reserve Bank gave its monetary policy for 2016. In there was a lot of emphasis on exchange control and fungibility. Now, I think you're familiar with some of the bullet points which they made. For instance, there's now a 15% cap from a 10% cap of how much a foreign investor can have on per counter. Is that the right way to go? And what was the motive behind? Are you in support of those RBZ efforts? Is there consensus?
Well, I'm glad to say that since that monetary policy statement came out, I actually had an occasion, me and my team, to meet the governor and just discuss things that we felt touched on the capital markets. And the point that you raised about fungibility, I think, came out. I think fungibility is something that we should really all embrace, in the sense that companies are all over the world. Yeah. They operate in many jurisdictions, in many markets. And as such, their shareholders or people who invest in those companies are found in many different places. Mm-hmm. So, and for price discovery, in the sense that if there is a particular stock or a company that is listed, shareholders in various countries should benefit from the same dynamics that drive that company.
Emphasize on the 15%, how much a foreign investor can hold per counter. Yeah. It's gone to 15% where it was 10%. What is the motive behind that? Do you support that?
What we have wanted to see is that, and it's something that we've always brought up with our own ministry, and to some extent also the Zimbabwe Stock Exchange, the central bank, is that under indigenization, the cap for a foreigner is 49%. Okay. And then the exchange control limit on foreign shareholding on the stock exchange is 40%. Okay. So already there is that discrepancy. That's something that in the meeting that I said earlier on, yes, we impressed on him that there needs to be just one limit, and we are pushing that. Let's just go to the 49%. Mm-hmm. Now, having said that, within that, so assuming that we do get the consensus of the central bank that we move from 40 to the 49, instead of an individual foreign investor being limited to only owning up to 10% in a particular company. Mm-hmm. On a stock exchange, they're moving that up to 15%. Now, we would actually want that to be removed, to just have the 49%. Now, why do I say this? There are situations where one particular investor maybe is good for a company. Yep. And wants more control of that company to influence the decision making, to raise money, or to even inject more of his money. Now, if that person is willing to go up to 49%, but the benefit to this company is going to be huge, it's going to be big, we are saying that we should not deny that person that opportunity.
And you're in consensus with the central bank? Well, you seem to be.
The central bank has moved it from 10% to 15%. Mm-hmm. And we're saying that is still not enough. Okay. It's still a big limitation, a hindrance. Because at 15% as a foreign investor, if it's a business that I really would like to get involved with, I'm not getting much in terms of control or sway into that company.
Let's emphasize the section in the monetary policy where we're talking about externalization of funds, because that is the key issue in that statement. We've got offshore investment boutiques in our country. Where do they fit into that structure? And is there any issues they should be cognizant of from a regulatory point of view? Do you have any relevance with that?
Okay. I think there are two separate issues here. I think with the offshore financial, and I'll come to that just now, mm-hmm. is that these ones are essentially offering a service for Zimbabweans or foreigners who are living here in Zimbabwe, mm-hmm. who may want to invest their money outside the country. Yeah. Right. So again, it's a global village. People want various exposures. Here in Zimbabwe, we offer certain types of investment products, not everything. So someone might want, say, investment vehicles that we don't offer here in this country. Mm-hmm. So you have companies that offer that service. They cater to the needs of that particular client. So they go through your objectives, what it is that you want, your aspirations, and so forth. And they try and match that with what they believe is suitable for you outside mm-hmm. there. So now, from the central bank governance point of view, any money that leaves this country has to be really washed because I think his statement was that we're exporting liquidity.
Yeah.
That the few money that we have, the few dollars that we have, why are we taking it outside for other investments?
Yeah.
So how we've approached this, and I'm glad to say that again, with the central bank, we are speaking the same language.
Okay.
We, since the middle of last year, started registering companies that want to offer this service.
Okay.
Now, why is that important? It's important in the sense that we now know, or very soon we'll know every single company that is in that business and how much money or rather, how much of their clients' money they've invested out.
So you can monitor capital flows.
Exactly. The limits that were put by the central bank government of $10,000, I think if you look at the ordinary Zimbabwean, and these companies cater solely to individuals, not to companies.
Okay.
So these are people perhaps trying to diversify their investment portfolio in terms of risk and so forth. And so the amounts that was set by the central bank government at $10,000, I think fits very well with the sort of target market of these companies. So by us registering them and licensing them and insisting again that they use the formal banking channels. So every request to invest offshore actually goes through a registered bank. The central bank will always have a clear picture of how much is being invested outside.
Now, with all these monitoring mechanisms you're putting in place, are these conducted, or let me say, are they put in place in a manner that reserves efficiency and doesn't intrude or isn't interruptive to the normal flow of investment?
Well, I don't think it will be. As much as I think we agree again with the central bank in that we should, I think as a market, try and attract, or rather attract this money to stay here in Zimbabwe.